Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the May 13th stock market wrap-up for you to use on Thursday, because today is Wednesday, correct? Yes, it is Wednesday. Okay, excellent. Let's go ahead and start with the New York Stock Exchange. New York Stock Exchange failed right at the 200-day moving average in the past 3 days, down 5.56%. Sold off today on heavier volume, and as you can see, came pretty close to closing at the exact low a day after opening at the high a day, 5854.43, closing at 56666. Uh-oh. And then, as you see, 5657 was the low. So pretty darn close. Heavy volume. Relative strength isn't that weak, though, however, but the big caps are always stronger during downtrends than more speculative stocks do the worst, and I'll prove that by showing you something a little bit. As you see, SP 500 breaks this uptrend trend line and happens to work. Past 3 days, down 4.88%. Another distribution day. That's not really the second one in a row, but the selling the past 3 days is pretty ugly overall. And what's even more worse is the way that leading stocks are acting. And on that end, let's look at the leading index during this rally, the NASDAQ. NASDAQ, as you can see, failed at the 200-day moving average, couldn't get higher. And, of course, in March, let's go ahead and give it its uptrend line, as you see there. Breaks 1, 2, 3, 4, 5 past 5 days. Down 5.40% on heavier volume. So it's not good that it's not only failing the trend line, it's also failing at the 200-day moving average. And like I said, not only that, but the worst news is that leading stocks look worse. Subscribers, I'll show those charts to you in part 2. I just don't want to give them out for free in respect to IBD. It's one of the greatest newspapers. If you don't read and subscribe to Investment Business Daily, you're crazy. So here's the lows for March. Now look at my trend line here. Okay, up to the lows right there. So there's the slope of these lows in March to the lows in May. Now let's look at the relative strength lows in March to the lows in May. Is that slope as steep as the price? No. Guys, that's called negative divergence, and that's what we're seeing in this index. The only good news that we saw today in the NASDAQ is that volume was lower. However, the way that they've treated leading stocks, let me just show you some of them. ALGT, see all the red on my chart at the end there? DGIT, see all that red after the breakdown on my chart there? That's not good. And then also MYGN, see that? That's not good. MYL, you don't want to see that. And then there's SCLN, nope, not that one, sorry. SGLN maybe? SLGN, I knew I'd get it. There we go. There's one, and then let's think of another one. AIPC, uh-oh, that's not pretty. You don't like to see that in your leading stocks. How did that IPO RST? Oh, that's never good. You never like seeing that. How about the solar stocks? Uh-oh, they're not doing good either, are they? So this is not action you see in the bull market. And if somebody was like, okay, well, this looks like October 02 to December 02. Really? Because I was an investor during there, and let's go to USNA as one of my longs during that time. So let's go back to 2002. You can see here where I went long. Let's see if it looks anything like now. So here we go. Let's tighten up the chart so you can see what it looks like on my Lappy. Let's see. I go long here. Let's see. How's this chart look? We got an uptrend already. The stock, the 50-day moving average over the 200-day moving average. That's interesting. How's Cena looking right now? Well, that's looking pretty strong. Netis looking darn strong. Look at all that green. I don't see that right now. Cena, Sohu, there's Sohu also looking darn strong. Look at this volume. Look at the accumulation. Look at the volume right there. So right there, that's 22,000 shares. And then right here, all of a sudden, out of nowhere, 10 million shares. Somebody just accumulates 10 million shares in one day. That's only the biggest volume ever, even beating the IPO date price. So it was a pretty significant day. And as you can see what happened to this, let's look at the stock. Just there you go. There's a good example. And let's look at USNA after I bought it. Okay, there's SSYS. How's that? Oh, okay. GRMN. Oh. As you can basically see right now, what I'm showing you is that the market was a lot more bullish back then compared to now. And now I'm going to show you Netis, show you another one, United Online. e-research online. I know it's looking a little short there, so let me just go a little bit further. There we go. So bottom line is, it's not looking anything like the 02 to 02 rally before the March 2003 uptrend. Sorry, guys. The best thing about this rally was the short-term trades from stocks that were oversold. There were excellent trades in Ford, GM even, actually, for a little while in March, but not really. Citibank, slightly. Bank of America was much better lows. However, RAD, Car, stocks like that, Saba, stocks like that, CYCC, stocks like this, and then GCA, or excuse me, CGA. Look at all this green. These are the kind of stocks that are basically the right ones. These are more fun. Look at TC kind of moving up. I'd basically be done with most of them, but the bottom line is that the stocks coming off the lows have the nicest chart patterns. Of course, like I just showed you, going back, let's even go back to Taser to prove my point about the 50 and 200-day moving average. It's just that right now our bear market was so bad that we had to go for the stocks that got beaten up. Look at this move in Taser. This is the initial breakout that I bought, the very first buy right here. I could have bought in June. Easily could have bought in June. Nothing told me not to buy in June. I just didn't like the base. There were too many hot stocks. Look at Epic. That's beautiful. Look at Hill. Oh, I mean, it's Hill in this one now. Now it's Hill. Look at that. Look at that. Look at that. So do you think I wanted to buy this in Taser? Heck no. But after it built this and it showed the fundamentals that it did, oh yeah. So that was pretty fun and it was good. Oh, Josh, you bought it after the 50 over 200-day moving average. You bought it too late. Really? Because that's a 2,390% gain. So I'm not too sure about that. Now, going back to my thing telling you that the leading stocks got hit, I showed you how the NASDAQ actually was down 3%, which was the worst hit index of the day. Nope. Let's go look at the S&P 600. Ouch. 4.73%. And look at the S&P 400. 4.38%. And guys, remember how I never got fully loaded in cash? But I watched and played these, but I basically stuck to the long-term winners, that we were in. I got out of solar, by the way, up here, guys, just to let you guys know for free. Here's whenever I began my sell in solar. 38% gain doubled. That's right. That's 76%. And then ASCA basically got out from here to here, showing you all the free guys. 48% gain, very quick. And that was how it worked. And ARST got the quick gain. ARST quickly gives up 25%. Take the gains, get out. And now, basically we're not playing. However, the better game was like playing Ford. Whenever Ford makes its move, look from this to the high, 92%, but more fun would have been something like Car from its move to its high. There you go, 302%. Look at a stock like AXL. Obviously, you don't buy it now. Here's the initial move. And then if you're watching it intraday, whenever it gets above the 187 high, you buy. Congratulations. Gapped up in the morning. Got down to 185, so if you would have had a limit order, you probably wouldn't have gotten hit at the high day of 187. However, if you're watching it as a day trader, you got 164% gain in one day. Other stocks like SRI also played very well, as you had this initial move right here on 5-1, and then boom, start taking profits. Up 18%, boom, start taking more profits after you're up 36%. Eventually, the tasers of the past will come back again, everybody, and we'll make some huge money once again, as you can see from here to the top. 3,418% gain. I only got 2,390% of it. However, there were other fun stocks like EGHT looking 2003 in this area right here. So stay focused to right here. Let's go and chop it off. And then like Epic, look at 2003. Evol, look at 2003. Then there was, some of my other better ones. Yeah, let's do Hill. Show you Hill, 2003. Show you it was MT back then, of 2004. That was one of my better ones. And then show you Apple. Let's show you Apple of 2004 to 2006 to show that you can be late and still get a big gain. And as you can see here to here, look at the gain, 496%. I got about 400% gain of it. So, it was a tough ride. However, on the last YouTube video, if you go check it out, you can see I posted all my returns of 2009 March and 2008 November. We made big money on the short side, including Apple, which I was short from here to the low here in January. What is that? A 51% gain, doubled 102%. So guys, we're going to make money even if this market rolls over and turns into a bear market. You shouldn't have been majorly long anyway. I told you that the IBD indexes were not leading, and in part 2, I'm going to show my subscribers those indexes. So remember, in March, as the rally started to go, I was skeptical about it. I wanted to see my Sorry, I took a drink. I wanted to see my CanSlim charts on my beautiful Max Green Bot chart set up above the 50 and above the 200-day moving average. Sadly, the best stocks were like, which is fine, Back, Car, Rad, stocks like that. I don't want to show too many of them, but I think I've shown enough. Stocks like JOEZ is setting up now. You know, you want to go long stocks like this early, like MXIM. I would watch this off the low and off the bottom, and I actually did try it, and it failed, like right here. So right here was what I would consider the buy day, and it did not fail. Went up immediately, worked, but as you can see, it came back, so you got to get rid of all of it. And you would have just avoided, by the way, an extra 2 to 4% loss. So it's just basically kind of a luck of the draw, but as you can see, also like with stocks like this, you know, look at them off the lows. You know, you go low, you go long right here with the long signal, and here you are with a 61% gain in a month. So it's good times if you pick them off the lows. Okay, guys, part 2 and part 3 is coming up next. Aloha.